Jordan Toy from Legacy Family Wealth joins us now for a look into the day that was in markets. Jordan, thanks so much for your time today. Let's start off with what's been playing out in local equities, right? Local assets as a whole. The rand also trading under 17 to the dollar. We saw the JSE All Share break through a record high. Yes, pulling back, but hey, an achievement overall. Bonds also powering through. What I've been finding interesting is that the rally has been fueled by SA Inc. stocks, which is quite different, right? We're so used to the gold counters, the platinum counters, as well as Naspers and Prosus fueling those gains.
Yes, definitely. I think something that jumped out at me specifically was it feels like one of those rarer moments where it looks like, at least fiscally, South Africa is in a somewhat better position than the US, which I don't think is something that you can say all too often. But yeah. No, we got to pick the wins when they come along. And I mean, just to touch on that, I think most of the positivity is coming out of the medium-term budget policy statement. You mentioned SA Inc. I think that's clearly a factor playing into those local counters. I mean, just to pull out a few, I mean, it was a long report, right? That medium-term budget, the speech itself is sort of 45 minutes, but the document goes into sort of over 100 pages. But, you know, some of the key points that have already been touched on is, I think the inflation target is something positive, at least in the longer term. I think there will be some pressures in the shorter term in terms of GDP and revenue, which the finance minister did mention. But what really jumped out at me is, you know, 10 years ago, we wouldn't have been talking, or that budget policy statement document wouldn't have really been talking about private sector participation, at least not in the same vein that it is now. I mean, there was a direct quote in that document that said, government cannot do it alone, and that private participation is essential, which I think for me, at least, is a shift in stance from government, a willingness to partner with the private sector, and I think that they're spot on. I think you need to get everyone pulling behind this plan. Just a few other points. We obviously continue to run a primary budget surplus, which is good. We move further and further towards getting that debt to GDP ratio under control. I mean, 10, 15 years ago, it was at a much lower level, but we've borrowed significantly since then. So it's good to see that the appetite is there from government to actually, you know, be fiscally responsible. And hopefully, I know you mentioned it earlier, you know, hopefully we get some good news from the ratings agencies. So S&P Global is expected to give us hopefully a ratings upgrade in the near future, which will just be another win, right? The longer term impacts of that inflation target and a ratings
Jordan,
upgrade.
are you pricing that in? Are you pricing that a potential ratings upgrade in?
I think it's likely from our view. I think we don't deal in certainties, right?
Okay.
We deal in probabilities. And I think balance of probabilities, we are optimistic that that'll happen. And I think that the budget reinforced that.
All right. And now let's take a look at what's playing out over in the US, right? We touched on it a bit before, where we are seeing the optimism around that government shutdown coming to an end, fading a bit. There's also rotation out of those tech stocks as there are concerns around valuations. There's also concerns around economic data, October figures to be particular, whether it's unemployment, whether it's inflation. How important are these delayed figures when it comes to the broader scheme of things? Some White House officials warning that they might not even be released. And this also comes at a time where some growth concerns are starting to, you know, come up again over in the US.
Yes, definitely. I think that uncertainty is clearly at play in the market today, right? So I think the focus is, you know, from Monday, it was looking likely that the shutdown was going to end. But what's now definitely in focus is, well, what data are we going to get? When are we potentially going to get it? You know, how quickly is this all going to unwind? And I mean, throughout the day, I've just seen sort of lots of different stories coming out. As you mentioned, you know, White House potentially saying that we might not get all of the October data. Maybe we do, maybe we don't. I mean, I do question if some of the data is survey-based. You know, do you survey these people and say, well, what were your thoughts in October? It becomes a little bit tricky.
Yeah.
So there will definitely be gaps in that data. There's definitely a backlog. I think from what I've seen, and I believe Goldman Sachs came out indicating that they think that we might have a schedule of when to expect what data by potentially early next week.
Okay.
Even November's data is potentially delayed. So definitely that is all playing into the mix today. I think it's just a bit of heightened uncertainty, right? And markets obviously don't like uncertainty as much as it prevails most of the time. So we're just going to have to wait and see. I think private sector data that we have been getting has been indicating that sort of the labor market continues to weaken somewhat. So we'll just have to wait and see what that actually looks like. There's a lot of unknowns at the moment in that regard.
So we're basically dealing with the ramifications of that government shutdown. Quickly, company news. How crucial is that IPO, the Virgin Active one, when it comes to Brait and value unlocking on that front?
I think it's definitely an important factor for Brait. I mean, it's not necessarily a company I follow extremely closely, but at a high level, it's a big part of their net asset value, right? So it's an investment holding company, so the net asset value is quite a critical measure. I mean, Virgin Active, you're looking at sort of almost 60% of that net asset value. So it's a big part of the business. We know that they're in a runoff phase. They're looking at trying to realize value for their shareholders and return that capital to shareholders. So Virgin Active, a key asset there. And I think you touched on it a little earlier. We had some pretty decent results out of that business specifically today. EBITDA up 45%. I think the revenue across the various regions was pretty strong. You mentioned UK and SA sort of both double digits, and even Italy at 7% I think is somewhat reasonable. Briefly we looked at some of the capex there. It's obviously the business that Virgin Active's in. You need to spend money and keep your equipment sort of optimally positioned. So yeah, I think it can't be understated that it is an important part of the Brait business model, and it seems to be holding up relatively well.
All right, unfortunately, we have to leave it there. I can't even get your stock pick because we have run out of time. Jordan, thanks so much for your time and sharing your insights with us this evening. Now, that was Jordan Toy from Legacy Family Wealth.